For Mining Clips, I'm Christina McCarthy. We're at another session of At the Bar. I have Mickey Fulp here with me, Brent Cook, and our guest, Jeff Phillips. Today, it would have been about March that we had our last At the Bar session here back at the PDAC event. And I don't know, what do you guys think? You think this is real, the buzz that you're hearing here?
Well, what I want to say first is good to have our people here and our esteemed invited guest, Jeff Phillips. And it's a little different than what we usually do because we're actually at lunch. And it may not look like it, but we're going to eat some food, and whether it turns into a liquid lunch or not, I think remains to be determined. That said, ask us a question, Christina.
So, Mickey, I have a question for you. What kind of stories do you like right now? You know, yesterday in the Legends panel, we talked. There was a question asked to Robert Freeland, Randy Smallwood, Rob McHugh, and all the legends of this industry. What do you like right now?
Why wasn't I included?
I don't know. And it's funny because only Rob McHugh had said a junior story. And it was, everybody else was a tech, Goldcorp, the bigger names. So
those companies have already moved. In my opinion, the mining companies up and down and most of the developers are overbought right now. And historically, when you're coming out of these bear markets, it becomes a trickle-down effect. And the real money is made in this business and always has been. The 5 and 10 baggers, even the 50 baggers, are news stories getting in early with the right people, the right share structure, the right project.
Yeah.
So at this stage for me, I'm looking for startups, I'm looking for shells with the right people.
I got some names for you.
The companies that have risen so much so far, the gold companies in my mind are overbought. And that's not saying they're not going high.
Yeah. I think, and you look at the exploration potential, and people want something exciting. People want to be able to see that there's this huge exploration upside.
I think it's a negligee effect. Everybody's waiting for that negligee to come off. So that's where real money, in my opinion, is made in early stages of the market.
So can you tell me some of the names that you like?
I haven't got my positions.
I'll share mine with you if you share mine. Here's the thing.
Well, okay. We'll do that off camera, okay?
All right, sounds good. Well, you guys see this buzz that is on the main floor here of this broad conference upstairs, and it's a different tone than what we've seen last. What do you guys think? I mean, what's to come down the road over the next couple months? Is it real? Are you guys think that gold's going to take another drought, or?
I've certainly not had to step over near as many dead bodies walking down the hall.
That's a good way to put it.
I think this is real. We've seen a turn, I think, certainly in precious metals. A lot of money's coming in. The flow of funds is increasing coming into this. And although I do expect we've risen too far too fast right now, looking a year out, 6 months down the road, I'm pretty positive inclined on the precious metal side. So yeah, this is good. I think we're back.
Yeah.
I guess I'm surprised as how fast it turned, because last time you were involved in one of these was PDAC, and we started to see some things going on. It's as usual. It's led by gold. We're up nearly 20% from a low in December 15th, December 20th, something like that. And so we've seen this big rise in gold, and there was a lot of pin-up money sitting on the sidelines.
Yeah.
A lot of that's smart money. I'm not sure it's all smart money flowing into the sector right now.
Yeah, and silver prices and that ratio is shrinking too, right?
The gold-silver ratio was 83 at one point, which is totally out of bounds. Now our latest calculation about 68, but at some point that gold-silver ratio is going to normalize somewhere between 50 and 55, and so. Right now, I'd still say if you're going to buy precious metals, gold or silver, I'd buy platinum.
I think it always comes down to market sentiment. And I would say when you ask if something's real, well, it's very real if you look at the charts of most of these gold stocks. They've moved up anywhere from 150, which is a bad performer, percent, to some of these things are up, 400 or 500%?
Yeah.
And you look at the charts of these companies, and you see back to PDAC that for 2 years prior to that, these things were flatlining, like in a hospital monitor, and not a single person wouldn't buy the shares. They weren't trading any volume.
Yeah.
And now in the last week, how many bought deals have been announced at 400% premiums to that flatline for 2 years? So for 2 years, no one would buy a stock. Now they're increasing every bought deal they announce. So it's real, all right. But the question is, what's the next move in the market? Right?
And when will that window close of that opportunity to finance, right? That's the scary part.
Or-
Because it's only open for so long, right?
It looks like a seller's market to me right now. We talked earlier,
Yeah.
and you mentioned how few warrants have gone with these latest
world.
financing. So my question would be, what's going to happen after the 4-month hold here in the early to mid-fall when all this paper can be traded? And we've kind of seen this happen before. Is that going to take a downturn in the market?
And it's right around the election?
Coincidentally, that is going to be about the mid-time of the U.S. elections. What's that going to do to gold?
Yeah, no, I think that's an interesting point. And that the first money that came in back in January, February, I think that was a smart money.
Absolutely.
We were seeing good companies getting money. The past 3 months or so, there's companies getting money that I wouldn't give a dime to. And I suspect that money coming into that is the short-term money. And when that 4-month hold is up, they're bailing. And I think that's going to get really interesting. I mean, this is what concerns me is everything's risen, right?
Yeah.
Good, bad, and
Yeah,
different. And I can give you an example of a company that bought 4 million ounce resource for a little over $2 million plus some shares, and they got some ratty stuff down in Brazil. That company is now valued at $200+ million. Get that deposit.
And that's a funny example that
I
you use,
I
Brent, because I
think
actually
I
own that asset
company
and sold it. So thank you very much
And
for
I'm very
pointing that out.
happy that I've owned that company because
Yeah, he owns that company. I sold the asset.
Well,
So-
I still have
Well,
a significant number of shares.
It's a goal
I'm playing
point because
that
what
company
Brent
on
is
the
showing
uptick.
again, I like to invest in companies that I believe will actually be a mine in the coming cycle, which we appear to have started the coming cycle. There'll be pullbacks, but I think we're in the next. There'll be some mines that come out of this cycle. Brent's using an example of a company that's achieved a fabulous market cap as an optionality play. And I was making the joke that the main one of their assets is I was a large shareholder in the company that sold it to them. And at the time I sold the asset, I was trying to keep this other company running and give them advice as a consultant. As you know, I'm an investor and consultant. Someone asked me, why would you do that? The person that we all knew that was buying it, why wouldn't you keep it? Because I don't want to promote something I don't believe. I'm not an optionality. I want to promote something I think might actually be a mine, which is very hard anyway. So, but the optionality plays have actually performed better than the geologist picks.
Yeah, no, I guess what I'm saying is that we're at that point where everything's risen, but now for those optionality plays, those out of the market ounces, those worthless marginal ounces, I don't know what you think, but those companies are not going to be purchased by the large mining companies. I think, at least for the next few years, the major mining companies have learned the lesson in buying marginal assets, and they're going to look for high margin assets. And those optionality plays are not going to buy. They've got inventory. Look at Newmont. They've got
and
inventory
a lot of debt.
of all sorts of worthless ounces they can bring in. They're not going to buy those.
Yeah.
What do you think?
I think it's going to be, you'll see the mid-tiers come out, right, and be buying up those assets. I think that but I think they got to get to, there's a threshold, right? Like I was looking at one the other day, and I'm thinking, this thing isn't, no one knows this name. It's got 2 million ounces, easily going to 3 at this next 2 phases drill. And I think that when they get to that point, look at, ounces are deplenishing. We're not replacing them fast enough.
Yeah.
And so there's going to be those mid-tiers that come around, I think, and think, okay, this is not going to be the big guys because they've already shot themselves in the foot and their balance sheet is off the charts. I think it's going to be the mid-tiers that come in and start looking at those big ounce potentials. And
So you think someone like Timmins or Tahoe or someone that's going to buy,
well, actually, they're doing it. Not large. They're going to buy the big ounce potential because they're going to start trying to.
Is predicated on the idea that gold is going much higher, and that's
Well,
probably
then buy anything with the name gold in it. If you
right.
believe that.
Yeah, so a lot of what we're seeing, a lot of what's being financed is predicated on a much higher gold price. That may or may not work out My real concern right now is walking the streets of Vancouver, which I do quite often. When I last was
You get paid?
good point. No comment. So I'm walking down the street in March and April. It was still pretty dead here. And I'm walking down the street now, and every shark, snake, charlatan, and shyster that I know of that I haven't seen on the streets of Vancouver for the last 4 years has a deal for me. Oh, Mickey, hey, look what I'm doing now. So that becomes when we get frothy, and I think the danger right now is it's gotten a little too frothy too quick, and maybe we need something like a little knockdown when all this paper comes out, or a pause in the rise of gold for a healthier market.
So are you doing those deals?
No, absolutely not. All I'm doing is right now.
A lot of professionals
I'm
are.
doing my own startups. That's
But people that you know are guilty of that. When the market gets rolling like this, there's a lot of people that you would consider smart money that when you ask them why they're doing a financing in that company, they say, well, because it'll double anyway because it's a good market. They don't believe in the company. But both of you, as geologists who have a unique perspective compared to most people, and as
She's a geologist.
What about me? I'm a geologist.
yeah, you're a geologist too. You're
Everybody-
the only
I know he's not a
You're
geologist.
the outsider here.
You're the
actually.
geologist, the non-geos telling the geos about geology.
I actually
That's
went to
very
one of the
good.
paid universities recently, and I took a $12,000 loan for a year from the U.S. government. I now have a geology degree. As you guys have heard me say before, obviously you have to understand the geology if you're really looking to invest in something. But in the junior market, you don't even have to have a real deposit to make a lot of money. There's people that make private placements because they know whoever's behind that is going to have that stock trade much higher. But I assume some of
But who gets burned?
the retail investor that
Exactly.
I
The
assume
retail investor gets burned.
and even the professionals that start to think they're smart and say, oh, I'm going to go into this because everything's rising and I didn't get enough of everything else. And
Maybe they're just greedy. Maybe it's fear of
It's greed. Fear and greed.
It's all about fear, panic, and greed.
Yeah.
At panic, when things go down, everybody sells. Fear, when everybody is selling. Fear also in conjunction with greed when the market goes up, that they may miss the next big thing.
But if I'm a retail investor listening to you guys, at this point, I mean, I guess we all sort of feel the market's moved very quickly and quite possibly is going to have a pullback. We could all be wrong, and it could keep going much higher. I am surprised at the number of financings that have come due in the last several months, and people aren't selling. They're holding that stock because they are greedy, and they think this is going much, much higher. It may over time. But I think you guys would agree that the companies a retail investor should be looking at are really people like yourselves that can analyze the deposit and if it really has a chance, some sort of chance to be economic.
Yeah.
Also, regardless of which way the market goes here, and I'll be quiet here in a second, aren't you better served investing in someone that has actually sold a company before? Couldn't you make those the two criteria? They have a deposit, but the person behind the company, and I'm not saying it's always good, but there's a number of companies that have successful people that have sold things. So would that be a good way to look at things?
It's easy.
Yes,
you got to hook yourself up with guys who have been successful before. That's the easiest way
But
to
if
be
you don't know-
successful in the future.
But at this point, when you're buying, you're either saying, I think the market's going to pull back and I'm not buying anything, or I want to buy a gold stock now. I think the stocks that should be looked at and will get looked at even if there's a pullback or no pullback are those companies that they've risen a lot, but not as much as some of the promoted optionality type plays.
Yeah.
I think people will start to gravitate towards things that, no matter what happens when the cycle and when the pullbacks, they have some sort of chance, which is what your newsletter is about. Identifying things that you don't look for production. You never want to see a company usually that's going into production, correct?
No, you're right. I want to find something so good that somebody buys it.
Yeah.
The last thing I want to do is build a mine.
Yeah.
So something Mickey said that struck me is, he's walking down the street and all these fellas are hitting him up for replacements and all these new companies and startups and this and that. And I think what we're seeing is that these guys are all looking for a pump and offload it on to the dumb retail. Is that what's happening now? I mean, I think we've seen smart money come in early. Now all these little guys, little companies that got to get a property somewhere in the Golden Triangle, and
Lithium property, the next whatever property. Yeah.
Yeah. So is that what is going to happen now? Is these things going to be pushed up as best they can with the hopes of offloading it to the retail in 4 months? Is that the game?
I think a little bit of that is, but it just depends on where you're at in the market cycle. I think this is the beginning of a longer term bull market in certain commodities and for exploration for those. So, again, but that's always the game, isn't it? I mean, there were people that financed better companies 4 or 5 6 months ago that are so happy to get double their money, they sold their free trading stock in February. Unfortunately, the stock doubled from there and tripled from there already. So they were selling to the dumb retail, but retail didn't get burned this time because the stocks kept going up. So, so I guess your question is, you start getting more and more companies, as you know, when you get pitched by these guys, that, they're not even a real company. They're trying to take advantage of the greed and fear that drives this market. We're in a greed.
We're in a greed market and a fear of missing the next.
And and I don't know about you guys, but I sit there and look at some of these companies, and I know the market pretty well. And I look at some of these companies. I thought about buying that company in December, and it was at 75 cents. And I see yesterday they announced a bought deal for $60 million at $3 a share. I'm like feeling kind of left out. I'm not feeling the love, So I think that's true, but when that stops, I don't know, Brent. I mean, there's worse and worse deals coming to market.
I don't know. That's what I see happening a lot, is the retail getting offloaded with the crap. All these guys get their double and do it again and again. It's always out looking for, I'm sure it happens to you. If you ever come to, can you get me a property? Yeah, I got a shell. All I need is a deal, right? I got to do a deal.
Yeah.
It's not like I want to find something. It's like I got to do a deal. It's a shame, I think.
Hey, well, the cameraman's running out of footage. I'm getting the kill sign. So let's end with a toast. And I'll do it in Spanish and translate it into English. Salud, dinero, y amor, which means health, money, and love. Not necessarily in that order.
Yeah, cheers.
Cheers, guys. It's good to be here with you. From the Historic Hotel in Vancouver, Notch 8, thank you, and to MineClips.com.